Let's talk about Beyond Meat, ticker BYND, the stock that just reminded everyone what happens when retail volume meets record short interest. This stock has exploded more than 100% in a matter of days, moving from the low 8 range to over 16 before cooling off. And it wasn't because of earnings. It wasn't because of breaking news. It was because of pure market mechanics. The data tells the story. Beyond Meat currently has one of the highest short interests in the entire market, roughly 39 million shares, shorted equal to over 50% of its float, with a days-to-cover ratio around 8 days. When that kind of pressure meets sudden volume, things get violent fast. In one single session, more than 610 million shares traded, nearly 30 times its normal average. That's not organic. That's a short squeeze. The breakout started the moment price cleared its multi-month resistance around 1050 and just kept ripping until it hit resistance near 16. RSI spiked into the 80s, signaling overbought momentum. But the higher-low structure is still intact. Watch 1350 support. That's the line in the sand. If it holds, bulls might get a second leg toward $18 or $20. Lose that level, and the chart probably fades back to the 20-day moving average near $11 now. Let's keep it real. The fundamentals don't back this move. Beyond Meat is still deep in the red. For 2024, they reported about $326 million in revenue, down 5% year over year, and a net loss of $159 million. Gross margins are barely back in positive territory at roughly 11%. And the company still carries nearly $800 million of debt. They are even working on a convertible debt exchange that could flood the market with up to 326 million new shares. Translation: dilution risk is real. So if the fundamentals are this weak, why is the stock pumping? Simple: narrative plus positioning plus timing. Inflation numbers cooled off. Consumer discretionary got a little rotation love. And the meme stock crowd started hunting the next heavily shorted name. Once Beyond popped up on those screens, volume took care of the rest. From a technical standpoint, the stock has reclaimed both the 20-day and 50-day moving averages for the first time since summer, and the MACD just crossed positive. A sign momentum could extend. The Bollinger Bands are expanding, showing volatility rising, which often precedes a major directional move. So how do you play it? If you're a short-term trader, you can look for continuation above 15 with stop control near 13.50, maybe even a defined risk call spread. If you don't want to fight the implied volatility crush. If you're skeptical, watch for exhaustion candles or declining volume. That'll signal the squeeze is fading. If you like this sector but want lower risk, here are a few stocks to watch.